The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
All right, joining us now to discuss the crypto markets is Luke Farrell. He's a trader at crypto trading and market making firm GSR Markets. Welcome to the show, Luke. All right, so we've got some mixed results in the crypto markets right now. Also, we are seeing in global stocks, at least, they are down. Is this all because of Fed Chair Jerome Powell's warning that there will be pain ahead in the economy?
Yeah, hi, Christine. Thank you. Good to see you again. Yeah, I say macro has been in the driver's seat all year, and I think this week and after Jackson Hole, the market has been reminded that the same type of inflationary headwinds with strong job markets remain, and I think you're seeing a little bit of a reassessment of the optimism that came after the CPI print last month and a bit of oversold conditions that started in June.
All right, so what do you see ahead with a hawkish Fed, with Fed Chair Jerome Powell? Do you see rate hikes up front? Will there be a little more easing toward the end, or is it brace for impact for the rest of the year?
I think that you saw the inflation fears peak in June, which was so far the lows in price, and some of the fear has been abated, at least about the pace or how uncontrolled things could get. The Fed got ahead of some of those worries by hiking 75 basis points. They seem to be signaling that that's very likely. The market's pricing that's very likely in the next meeting. But what I heard from Jerome Powell in Jackson Hole was not to freak out or to worry, but just a reiteration of their plan that they had laid out the whole time. They've mentioned a few times that they are at neutral now, so they're data dependent. That adds a little bit of optionality to the Fed. It also adds a little bit of things for the market to talk about and to speculate on. But I would say that the confluence of events coming out of the summer, there are three important events I'm looking for in the middle to end of September that all align within the same week that should keep volatility kind of heightened. You have the CPI print in 2 weeks from now, followed right up by the Fed meeting, and merged right in between the two of them is the Ethereum Merge. So, I think there's a lot of different data points coming up for the market to consider, and that to me means a little bit more volatility, at least in the short run.
I just want to take this time to play a clip from Fed Chair Jerome Powell during the Jackson Hole summit on Friday. Let's have a listen.
In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook.
So what do you expect to happen in September, and how do you think that'll impact the crypto markets?
Yeah, I think when they say, that's a great question. I think when they say extremely large, it's relative to history. 75 basis points is still extremely large. So the market's pricing 75. I don't believe that there's been much speculation that it'll be larger than that. But coming out of an inflation print that went down month over month for the first time last month, market got a little bit excited. I think that they're walking back some of the interpretation of what getting to neutral means. They moved pretty quickly to get to where they are. They needed to. And I think, personally, I think we'll see another 75 basis point rate hike. The most important part is they're starting to talk about the labor market tightness. So they're talking about the other side of their dual mandate. And because of the record lows in unemployment, I also think that gives them a bit of cover and room to stay tight and to continue on their plans, of rate hikes, but not aggressive, but also the quantitative tightening plans that they've set out and continue today.
Also in September, to add to the volatility, we had the Ethereum Merge happening. The Bellatrix upgrade, which begins the final countdown, is set to activate on September 6th, and the merge itself will be completed at some point between September 10th and 20th. How do you think, among all these factors, that will impact the trajectory of the crypto markets?
Yeah, I think the merge is a great thing to think about from a medium to long-term perspective for the Ethereum markets. I'm not sure that it has an immediate impact on price just from the set of network upgrades that we're getting. The market's excited about it. It's been the only crypto-specific, large event to focus on this year. And I expect that a successful merge will pave the way for Ethereum to remain top two, or it will increase the ability for institutions to allocate to Ethereum if they haven't started already. The fundamentals certainly point to positive price dynamics versus what you have now on proof of work. I mean, as you move to proof of stake, the emissions drop by 90%. So the tokenomics, if you will, are better. The energy carbon footprint is significantly reduced by something like 95 or 99%. So I think that will give it an interesting narrative to talk to the Bitcoin community about, as their energy costs will remain proof of work and pretty high. But I see Ethereum and the dApps and the availability of smart contracts and the programmers that are working on the network and the size of that continues to grow. I see as a very powerful force looking forward.
Yeah, interesting you say that, because on the flip side, Bank of America is saying they believe Ethereum will lose momentum until the merge happens and is actually completed, I guess, to see whether or not all goes well. Amid all of these factors to juggle with the Fed, with the merge, how are institutions figuring out and navigating a strategy amid all this volatility?
Yeah, that's a great question, Christine. The thing I like to think about institutions is they're more sophisticated and they like to use tailored tools. GSR works with many different type of clients, like token issuers, some hedge funds, Bitcoin miners. We're always having conversations on topics with them, whether it's from our macro views, like we've been discussing, or how to hedge their specific project risks or their specific token schedules. Like some examples of what we're discussing with them now are around the merge. Some are how to generate yield on the new proof of stake after the completion of the merge, how to generally generate yield for DAO treasuries, or using our options expertise to tailor solutions that specifically fit their risk profile, like mining production costs. How do miners hedge for the situation where Bitcoin prices move lower now that we're nearing their marginal cost of production?
All right, interesting. So in terms of derivatives and playing the options, what kind of strike prices are you seeing? Is a lot of puts, a lot of options, a little bit of both?
It's been a little bit of both. I think that from the middle of January to now, the story has been in Ethereum and the call option volume and open interest versus puts. The market got very bullish on Ethereum, and one way to play it coming out of the middle of the summer was to buy a lot of calls. I think the largest open interests are in the December and March, say 3,000 to 4,000 strikes for Ethereum. The interesting thing on the Bitcoin side, I think 20,000 is just this level that miners care about. As it goes lower, it just starts to eat into their profits. You're seeing an uptick in miners' interest to hedge now, a lot more than we were even at the start of the year. So it has been a little bit price reflexive, but they're both looking to cover what they didn't, but also now to think about future strategies as the derivative market evolves. And GSR is having conversations with these type of clients all the time to try to help them do just that.